Have you ever looked at a financial chart and just felt lost? Like you're trying to read a completely foreign language? Well, here's the thing. The market does have its own signs, its own weather patterns. And if you know what you're looking for, you can learn to read the clouds and see change coming before it even happens. So today, that's exactly what we're going to do. We're going to learn to read those clouds. All right, take a look at this chart right here. To the untrained eye, it might just seem like a bunch of random ups and downs. But I promise you, hidden inside these candlesticks, there's a message, a potential storm warning. So the real question is, can you see it? Can you spot the signal that's hinting that this nice, sunny uptrend might be about to hit some bad weather?
Think about it. Before a real storm hits, the sky gives us clues, right? The wind starts to shift, dark clouds gather on the horizon. Well, guess what? The financial markets are pretty much the same. They have their own premonitions, their own little signals that tell us a big shift in sentiment, a potential downturn, could be just around the corner.
So, what is this specific storm warning we've been talking about? What's the signal we're searching for? It's a really powerful candlestick pattern, and it's called the dark cloud cover. Today, we are going to pull this pattern apart, piece by piece, so you can learn exactly how to spot these clouds when they start gathering on a chart.
So, to put it simply, the dark cloud cover is a two-candle pattern. It tends to show up at the tail end of an uptrend, and it's a pretty big signal that momentum is shifting away from the buyers, the bulls, and over to the sellers, the bears. It's basically the market's way of tapping you on the shoulder and saying, hey, you might want to watch out.
Now, here's where it gets really interesting. Spotting this pattern isn't just some vague gut feeling. Nope, there are 4 very specific core standards that have to be met to identify a true dark cloud cover. And getting these right, well, that's the secret to telling a real warning from just a false alarm. Okay, let's break this down. First things first, you gotta be in an uptrend. This pattern means absolutely nothing if prices are already falling. Second, you see a nice, strong green candle. This tells you the buyers are feeling confident. Third, the very next day, the price opens even higher. It gaps up, which on the surface looks incredibly bullish. But then, and this is the whole twist, the sellers jump in with force. They push the price all the way back down so it closes deep into the territory of that previous green candle. And that brings us to the single most important rule of the whole thing. That second red candle has to close below the 50% midpoint of the first green candle's body. I mean it, this is non-negotiable. If it doesn't cross that halfway line, it is not a valid dark cloud cover. Why? Because this proves the sellers didn't just put up a fight. They actually erased more than half of the previous day's buying pressure in one go. That's a serious statement. Now, you want to be even more confident in what you're seeing? Check the volume. If that big red candle, or dark cloud, forms on higher than average trading volume, wow, that is some powerful confirmation. It means there was a ton of participation in that reversal. A lot of people were selling, and that gives the whole signal a lot more weight. Okay, so we've got this powerful tool in our toolbox. But like any tool, you gotta know what it's good for, and just as importantly, where it falls short. This pattern isn't a crystal ball, right? So using it effectively means knowing when to trust it and what its weaknesses are. So on the plus side, it's a fantastic early warning sign, especially if you see it pop up near a known resistance level. It gives you a really clear reference point for building a strategy. But, and this is a big but, the major downside is the risk of false signals. That is why you should never rely on this pattern alone. You always want to use it with other indicators, maybe an RSI or a MACD, and just be extra careful in those really choppy, volatile markets where it's just less reliable. All right, to really get this down, we need to go one level deeper. See, the dark cloud cover has a close cousin, another bearish pattern that can look pretty similar if you're not paying attention. Understanding the subtle little differences is what really separates the pros. So let's put them side by side and see what's what. Okay, here we go. Dark cloud cover versus the bearish engulfing pattern. Look closely at the pattern itself. The dark cloud only partially covers that first candle, right? It just has to close below the 50% mark. But the bearish engulfing, it completely swallows the first candle whole. So what does this mean for the market? Well, the dark cloud cover suggests a fight is brewing. Bearish feeling is growing, but the battle's not over. The bearish engulfing, on the other hand, says the fight is over, and the bears won, decisively. For that reason, the bearish engulfing is usually considered the stronger signal of the two. So after all that, what's the big takeaway? We've decoded the pattern, we've gone over its rules, its pros and cons, and how it stacks up against other patterns. What it really all comes down to is learning to read the story the chart is telling us about who's in control of the market.
And that's really what the dark cloud cover is at its heart. It is not a guarantee. It's not a 100% certainty. It is a key signal. It's a powerful, statistically meaningful heads up that the trend might be about to turn. Think of it as a prompt to start paying closer attention, to manage your risk, and just to be ready for a change in the weather.
And that really just leaves us with one final thought to chew on. When you see these dark clouds gathering on a chart, does that mean a storm is absolutely positively going to happen? Well, not always. But the wise trader, just like a wise sailor, respects the warning signs and prepares for whatever might come next.